So every Bitcoin that you don't buy is a $13 million cost. That Ferrari that you're going to buy is going to cost you like 6 Bitcoin. And so it's going to be $100 million Ferrari. You shouldn't quit your job. You shouldn't splurge on sports cars you can't afford. Don't buy a yacht because it's obscenely expensive. And don't pay off your mortgages. Don't get debt free. Any capital you have that's not marked to market capital would be better invested in an asset that's going up 30% a year for the next 20 years.
In this powerful interview, Michael Saylor lays out a no-nonsense roadmap for building generational wealth with Bitcoin. He breaks down why keeping your job, avoiding flashy expenses, and strategically using debt could lead to massive gains, and why most people are thinking about money completely wrong. Saylor explains how Bitcoin isn't just another asset. It's a superior form of digital capital that continues to absorb value as traditional investments get weaker. He even shares his long-term outlook, $30 million per coin by 2045, and he argues that the volatility Bitcoin faces today is simply the price of being the most liquid and useful asset in the world. Watch until the end to hear why every crisis is quietly creating a new wave of Bitcoin believers, and why the smartest capital on the planet is already rotating in. Also guys, if you like our cryptocurrency content, please remember to like and subscribe to stay up to date. Now, over to Michael.
Are you surprised the US hasn't yet bought Bitcoin?
I was surprised that the U.S. has embraced Bitcoin as radically as it has over the last 6 months. I think expect nearly all the cabinet members to be so enthusiastic, or the Secretary of the Treasury. I didn't expect the strategic Bitcoin reserve to be put in place so quickly. I didn't expect the crypto czar to declare that Bitcoin is a global digital commodity in the world and is digital gold. I didn't expect the President of the United States to say never sell your Bitcoin. So those I didn't expect. I generally expect that large governments will move in a plodding, somewhat methodic, not always rational fashion, because there are just so many interests involved. And so my expectations are moderated in that regard. I think most of the aggressive action will come from small, mid-sized businesses, because they have the most to gain, the least to lose, and they can move the quickest.
But when the rhetoric has changed from the White House and we have the strategic Bitcoin reserve and all these tailwinds, you're buying pretty much every Monday. Why isn't the price at 150 or 200K?
I think we're going through a rotation right now where, lots of non-economically interested parties are rotating out of the asset. And then a new cohort of investors are entering. A lot of Bitcoin was, for whatever reason, left in the hands of governments, in the hands of lawyers, in the hands of bankruptcy trustees, like the FTX bankruptcy, and they kind of had to hold it for a year or 2 years as they're working through their process. And then when they saw this massive market rally, I think a lot of those trustees, they don't have a 10-year investor's mindset. They just thought, well, this is a good exit point to get liquidity. So I think people less committed to the long term have been taking this opportunity to exit the market. And I think a whole new class of investors are entering by way of the ETFs and by way of the Bitcoin treasury companies.
One of the things I enjoy most about talking to you or listening to you is the whole market could be in total panic, fear, anxiety about maybe the macro factors, and you always have this sense of calm about you that things will get resolved. So you're clearly not worried about things that are happening will eventually resolve these global tensions, the tariffs, and it'll be smooth sailing for Bitcoin eventually. That's the read I get.
Every single crisis recruits a new class of Bitcoin believers. There's just a delay in between the crisis and the Bitcoin rally. So for example, in March, Bitcoin crashed with everything else down to like 4,000 or 4,500. And I started buying it in the 9,000s or the 10,000s. And I remember when Bitcoin was 10,000 and the NASDAQ was like 12,000. Then Bitcoin would rally up and rage, and then there would be a crypto crash and it came down. And on the other hand, here we are today, Bitcoin's like 96 or 97,000, and Nasdaq 17,000. And now we're in a big tariff crisis. And the near-term reaction is always the market cramps and everybody sells everything. But the long-term reaction is, if I had all my money invested in Bitcoin instead of invested in that company, I wouldn't have been affected by tariffs. And so what you have is a reallocation of portfolios to being more Bitcoin, less the other thing. People are thinking now, if I had more Bitcoin, less gold, I would have made a lot more money in the last 4 years. If I had more Bitcoin, less big tech, I would have made a lot more money. If I had more Bitcoin and less that bond instrument, I would have done better. So these are teaching moments, right? And in any macro panic, the most liquid, leverageable asset is Bitcoin. Bitcoin is the only thing that you can sell. You can sell it short with 50x leverage on Saturday morning. It's the only thing that you can short 50x on Saturday morning. So when people panic on a weekend or an evening, it's going to be volatile. And if someone wants to sell some financial asset because of some gloom and doom thing that's happened, they're going to go to Bitcoin first because it's the only thing they can trade. And not just trade in the US, trade globally, worldwide. And so it is volatile because it is useful, and it will be in times of panic and contraction. It will correlate for a short moment with other assets, but then it will bounce back and it will break. It'll break that correlation, decouple, and it'll rally higher. And that has happened, consistently for the past 15 years, and it's happening right now as we watch it. So I'm calm in these times because I think we're going to win over a new set of Bitcoin believers, and a new set of people that thought they had the perfect business are going to realize that no investment in real estate and private equity and public equity or in a currency derivative is a risk-free investment. And when we say, look, Bitcoin is not a currency derivative, it is not a company, it is not real estate, it doesn't have a supply chain, it has no employees, it has no nexus, it is not, subject to that counterparty risk. Now there'll be a new class of investors that will understand what it means to be exposed to those risks, and they'll be like, oh, you mean like no tariffs on Bitcoin? Yeah, no tariffs on Bitcoin.
Michael Saylor lays out what he sees as the smartest path to building real wealth with Bitcoin, and it's surprisingly grounded. You don't need to be a tech CEO or a hedge fund manager. According to Saylor, the average person can still aim for 100 times returns, but it starts with discipline. Keep your job, minimize expenses, and start stacking sats. He puts it into perspective with a striking vision. By 2045, he believes a single Bitcoin could be worth $13 million US. That means the car you're eyeing today could cost you not just money, but the future value of multiple Bitcoin. He urges people to think long-term and treat every spending decision like an investment trade-off. When it comes to leverage, he's clear. It's not about taking wild risks. It's about smart, strategic use of long-term mortgage debt, especially if you own property. Why? Because mortgage debt is fixed, subsidized, and not marked to market, making it a powerful tool to convert stagnant capital into an appreciating asset like Bitcoin. Saylor also explains the real reason people buy Bitcoin. It's not hype. It's because they simply want to keep their money. In a world where inflation and systemic risk eat away at wealth, Bitcoin offers clarity, security, and an escape hatch. He finishes by highlighting why his own company, MicroStrategy, has become a model others are watching. By restructuring their balance sheet around Bitcoin, they've built a digital capital engine that strips away the risks plaguing most modern businesses. And the smartest investors, he says, are finally starting to notice.
You've said that if you want to 10x your money, buy Bitcoin. If you want to 100x your money, buy Bitcoin with someone else's money. And if you want to 1000x your money, then buy Bitcoin with someone else's money and lever it. But for the average person watching who's probably a wage earner and not a business leader, what do you think is the best way to 100x your money? Can you still do it with Bitcoin, and what types of strategies can be deployed?
I think the best way to get superior returns, 100x type B, you adopt you keep your day job, and so you maximize the cash flow you generate via whatever your profession is. You're responsible on your expenditures. You have to think in the year 2045, I think a Bitcoin's worth $13 million. So every Bitcoin that you don't buy is a $13 million cost. That Ferrari that you're going to buy is going to cost you like 6 Bitcoin. And so it's going to be $100 million Ferrari, right? If you look out 20 years. So you have to keep your job. You know, unless you're insanely rich, don't splurge on the Ferrari. Buy the 6 Bitcoin instead. And with regard to leverage, the intelligent leverage for the individual is generally long-dated, mid-dated mortgage debt. So if I have any kind of property, you know, if I have a house, I would put a long mortgage on it, a 10-year mortgage or 15 to 20-year mortgage on it, especially a conforming loan, and then I would roll it into Bitcoin. Because mortgage debt is not mark to market. It's against an asset which is fairly stable. Normally the interest rates are somewhat subsidized by a Fannie Mae or a Freddie Mac program or a government program. So it's the cheapest form of permanent capital that someone can get. So, you know, I give you what you shouldn't do. You shouldn't quit your job. You shouldn't splurge on sports cars you can't afford. Don't buy a yacht because it's obscenely expensive, and don't pay off your mortgages. Don't get debt free. Any capital you have that's not marked to market capital would be better invested in an asset that's going up 30% a year for the next 20 years.
Michael Saylor makes one thing clear. Bitcoin isn't just surviving global financial uncertainty, it's thriving because of it. As the world grapples with debt, inflation, and institutional breakdown, more investors are waking up to the one asset that operates outside the system. Bitcoin doesn't require trust, it runs on truth. While others are still questioning, the smartest capital in the world is already moving. The price may not reflect it yet, but beneath the surface, a massive rotation is underway. Bitcoin continues to prove that it's not just a hedge, it's a new foundation. Thanks for watching, and if you enjoyed this video, please remember to like, subscribe, and share your thoughts in the comments section below.